Good morning, I'm Peter Milios from the Finance News Network. Hotter than expected March inflation data triggered a wave of selling in the US markets, with the 10-year Treasury yield soaring back above 4.5%. The Dow Jones fell 1.09%, the S&P 500 slid 0.95%, and the Nasdaq Composite closed 0.84% lower. The March CPI came in a bit hotter than consensus expectations, rising 0.4% for the month and 3.5% year-on-year, versus expectations of a 0.3% monthly increase and a 3.4% year-on-year. Core CPI, which excludes volatile food and energy prices, accelerated 0.4% from the previous month, while rising 3.8% from a year ago, compared to the estimates for 0.3% and 3.7% respectively. Investors are now questioning the timing of rate cuts this year and the likelihood any cuts would be pushed out later in the year. Minutes from the Fed's March policy meeting raised concerns that inflation's progress towards its 2% target might have stalled, and restrictive monetary policy may need to be maintained for longer than anticipated. Oil staged a rally on news that the US and its partners are expecting major missile or drone strikes by Iran against military and government targets in Israel. Turning to US sectors, every sector with the exception of energy finished in the red. The worst performing sector was real estate, which fell 4.1%, followed by utilities and materials, which fell 1.73% and 1.55% respectively. Energy was the only sector to finish in the green, closing up 0.38%. In local news today, investors will be looking at Chinese inflation data expected to be released later in the day. The SPI futures are pointing to a 0.8% fall. Thank you for listening.